Macro jitters hit Bitcoin after brief surge to $104,000. Bitcoin climbed to $104,000 early Thursday, helped in part by expectations that easing U.S. government reopening after 43 days might offer markets some relief. But the optimism didn't last. Boston Fed President Susan Collins warned that the threshold for further rate cuts remains relatively high, and that policy rates may need to stay elevated for longer. Her remarks immediately pressured both stocks and crypto, pulling Bitcoin back toward $102,500. Market maker Wintermute notes that crypto is increasingly driven by liquidity flows, rather than crypto-specific catalysts, or the classic 4-year halving cycle. In today's market, macro liquidity conditions are the clearest signal for Bitcoin's next major move. Bitcoin's approximately 0.8 correlation with equities also means it's behaving more like a high beta risk asset than an uncorrelated digital gold. With macro uncertainty still elevated, the path upward remains challenging. Even so, sentiment indicators suggest a bottom may be forming. The Fear and Greed Index has plunged to 15, extreme fear, a zone where contrarian traders often look for opportunity, echoing the old mantra, be fearful when others are greedy, and greedy when others are fearful. Wintermute adds that despite months of weak liquidity, flat stablecoin issuance, slowing ETF inflows, and shallow market depth, Bitcoin continues to show resilience. The asset remains within 20% of its all-time high, a sign that BTC has been holding up far better than market conditions would suggest.